Hi, this video is for loan officers. Today, well, first of all, if you're not following my YouTube and getting my consumer content to share with your consumers on student loan updates and consumer education, you should go ahead and do that. That's really, really important if you're touching the purchaser market with student loan debt, whether you're purchasing our services or not. Please do subscribe to my channel. We put out content weekly. That content is really vital to helping us gain trust with consumers, and you are welcome to directly share that content over to your borrower audience. That is first and foremost. So like and subscribe to our channel for updates. I also tend to come out with content for lenders and loan officers. So today's content, I'd like to focus on in this market, and as we see tons of layoffs and even lenders closing down now, because we've had several loan officers coming from brands, smaller brands who move companies and now coming back, reactivating their products with us with different email addresses because their prior lenders closed down, that it's a important time in the market to pause, and as we slow down with inventory shortages, increase in interest rates, to ask ourselves, what is our strategy for survival? Is it only to cut costs because we want to quote unquote survive right now, right? It's like when you have a budget crunch. Or can we think about innovative ways to come out on the other side and refuel how we service consumers and how we brand ourselves in the market, right? The unfortunate truth is mortgage is a commodity. What you offer is not necessarily unique, but the education that you provide and the questions and help you provide a consumer is what builds trust. And what builds trust is what gets the business, okay? And of course, the more knowledgeable you are to your niche segment, if you're a lender that helps investors with syndicate deals, for example, then understanding how to set up a syndicate is really important and adds a lot of value. If you're a lender that's younger, that wants to focus on millennial market, then understanding the millennial market needs is important. So just understanding, like, how are you positioning yourself? I'm working with an amazing lender right now who I set up a syndicate deal actually with a couple other people, and is helping us get a loan. And he can provide all kinds of information on, like, not that he's an attorney, but setting up, how do you set up an incorporation? How do you think about a trust? How do you think about protecting your assets? And all of that. And it's an off-market deal, so we don't have a realtor. So he's also a licensed real estate broker. So having all the advice around that, even though he's not acting as a real estate broker, is super helpful. So that is an example of a service that Better.com or Quicken can't do. They're not going to provide this level of knowledge, expertise, and guidance, right? The same example comes for like student loan borrowers or millennials. Like, you see people coming in with significant student debt, and by the way, we know that that is upwards of hundreds of millions of dollars in 2021 for the top lenders. And it is about 50% of the purchase market. So it's a huge segment of borrowers. This is not niche at all. In fact, I would say there's more student loan borrowers with aspirations to buy than investors who are trying to lend money, trying to borrow money. There's much more going the cash route, right? But the point that I'm trying to say is, like, if your target is purchase market, millennial buyers, then understanding the student loan side, not becoming an expert, you can rely on us for that, but having that increased knowledge is key. I want to talk today also about the strategies to survive this cycle. Even though I'm not a lender, I do want to tell you the type of conversations we are having with lenders and the type of conversations we're having with alternative products that help lenders generate more income. So I'd say we're one of them, because we help you close loans that otherwise you may not close at, as well as close at higher volumes, higher mortgage loan value, excuse me. So we're one product, but there's a few products. Like if you sell property insurance. Like if you give give links to property insurance and they purchase property insurance through specific platforms. I was talking to the founder of this company called Bubble. Then they allow the lender to make money off of the home loan product that the lender sells. And of course, there's different revenue models based on if you're going to become a licensed insurance broker or not. But that's another way, right? There's obviously, I understand RESPA, and so there's no kickbacks for the lending service, but there are other products out there that can help borrowers who aren't necessary. There's also products to help borrowers who are not necessarily ready to buy today, right? If people need all kinds of services, from debt management to other services. Again, I'm not, of course, advocating to break RESPA laws or any of that. And of course, not sending people to like a negative, to some service that has negative reputation. I'm not about that as well, but I am about like loan officers thinking about ways to generate other forms of revenue that are congruent to their real estate line of business, right? So I thought the insurance one was perfect. So that's an example, but now's the time to really think about buckling down and think about innovative approaches, even if you're not deploying them immediately, because here's the reality. Think about a fruit tree. If everyone only picked the fruit from the lowest hanging branches, and everyone's trying to compete for the fruit on the lowest hanging branches, which are like the super prime credit score borrower who has a W-2 and has no liabilities and has a perfect credit score, and imagine the perfect borrower. Everyone's trying to go after that borrower, or as close to that borrower as possible, that's ready to buy today. That's another factor. That has a contract executed, essentially, or close to execution, and they're about to buy. That's every lender's running after that kind of borrower. So if you can help borrowers that are 1 to 2 to 3 branches higher, or even 5 branches higher, and you give them advice, you sit down with them, especially in this market, since things are slow, when they need to originate, they're going to remember you because you handheld them through the process. You provided them with information, nurture them. And by the way, they will refer you to other people, especially if you provide a lot of good advice that they couldn't get from other lenders. There are lenders, I had a back-to-back lender interviews here. One was like very much like, let me process your application online. I'm just going to ask you a bunch of questions and you're going to answer them so I can complete this app. And the other lender was like much more strategic about what are my plans, what are my goals. And it was much more of like a strategy and advice giving around what I can do to help me not just successfully close, but manage my relationships with my partners in this real estate deal. And I thought, I don't even know this other lender's interest rate. I know the other one that asked me a bunch of questions and we got an interest rate, but I don't even know the interest rate of this second lender, because it wasn't about completing an app and getting a pre-approval immediately. It was about strategy. And of course, I'm going to complete the app and we're going to get the pre-approval and get the interest rate, but it's not only about that, right? And so how do you add value? How do you think about this slow time to think about alternative products? So that is what I want to talk about in light of just the layoffs and the significant amount of changes occurring in this market right now. I hope this was useful. If you like this content, please subscribe. And if not, we will see you after the 4th of July holiday. I'm making a consumer video next week, a tour of my tiny house. I'm putting in a backyard. If you want to catch that consumer video, please do. It's a way to land hack and generate income from your backyard space you already have. And this is an alternative that I tell borrowers about in the event they, for whatever reason, can't take out a loan now, or they are having a hard time with affordability and the interest rate. So Anyways, we hope you like, subscribe, and share this video with other people you believe could be helped. If you're interested in learning more about our product and service, by the way, I sometimes forget to plug myself. We would love you to schedule a demo. We will link it below, but our website is also myloansense.com. Enjoy the rest of your week.